You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back today, one final time for the, and indeed for the year, for a little program we call This Week in Futures Options, a program where indeed for many years we've been breaking down the week that was and indeed still is out there on the futures options side of the fence. So what's popping off in products like the ags or the metals or the rates or FX or whatever comes across our radar that week. My name, of course, Mark Longo from the THE optionsinsider.com, as well as from the network upon which so many of you folks are mainlining these days. Thanks to all of you, whether you're one of our new listeners who discovered TWIFO this year, or one of our long-time network listeners. We appreciate all of you out there. Remember, if you do like what you hear, you want to help continue to see new people discover the content, then wherever you're listening to this, make sure you leave a comment, a rating, a review, a star, whatever your platform lets you do. All of that in aggregate helps new people continue to discover said content out there. And then, of course, if you want to go above and beyond, you want to join us in the pro. You don't want your broadcast week to end with volatility views every Friday. You want to come back for options oddities. You want to have awesome pro Q&As. Just did awesome double headers last week for all of you pro folks out there. You want to get early access to stuff like the Options Bootcamp, double headers, and everything else we do over there, as well as great giveaways. Almost time to give away the December Pro Trading Crate. Crazy how time flies out here. Only one place to go to get your hands on all that, as well as nearly 300 episodes already up there for you in the old exclusive pro podcast feed, theoptionsinsider.com/pro, the place to go to learn more as we head right on into our movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the final movers and shakers report for this mad, insane year that has been 2023. We're going to do a little bit of a different show this week. It is our final episode for the year, so we thought, let's have some fun. Let's look back on the full year that has been 2023. So we're going to do some of that throughout the show here today. Let's kick it off, though, one final time looking at the week's movers and shakers. Again, you folks can see this report for yourselves if you follow us on Twitter at Options. You follow CME Group on Twitter. Then we both tweet it out right before showtime, so you can see this, of course. If you're not subscribed to Bandtix already, you should be checking them out as well. Bandtix.com, that's the place to get this report. And a whole bunch of others we don't have time to get to on the show every week. And of course, if you want to follow along with the free version, kick the tires and light the fires before you upgrade to the pro side. Then cmegroup.com/TWIFO is the place to go to learn more about that. This week, as you might imagine, given the fact that we are still feeling the afterglow of this Fed announcement last week, we are still seeing mostly green on the screen this week. I would say it's roughly 70-30 green over red this week. Also have the largest percentage mover coming on the green side of the fence. So you know me, I'm going to start to the dark side because why not, listeners? Number 5 to the dark side is soybeans off 1.8%. Number 4 coming behind it, getting more interest these days are these different S&P sectors. Number 4, we have the real estate sector off 1.86%. It was number 3 in the other direction last week, up 7.09%. So an interesting couple of weeks out there on the real estate front. Obviously, Fed weeks, interest rates, all key drivers and everything that goes on out there on the real estate front. Number 3, back to the ags, in particular, soybean meal off exactly 2%. Don't see that too often. It was number 5 in the same direction last week, off 2.7%. So rough couple of weeks for soybean meal. Number 2, back to the sectors. It is the utilities sector this time, coming in a little over 3, about 3.06% to the dark side. And the number 1 dark side mover for this final show of 2023, Class 3 milk off to the dairy. I haven't talked about dairy in a while. Off 4.43%. Now to the light side we go, listeners. Number 5, it is feeder cattle. So staying in the ags, but going off to the livestock. Feeder cattle up 2.29%. Number 4, going off to rough rice. Is it a rough week for rough rice? Well, probably not, because it's in the light side this week, listeners. Up 3.24%. And the number 4 spot. Number 3 from the ags off now to energy, in particular heating oil, up 4.15%. Number 2, it was our story for the first couple of years of the pandemic. Certainly 2020 and 2021, the most volatile asset out there was lumber, up 4.44% this week. This year, lumber, kind of a bit of an also-ran. We saw other factors conspiring to mute some of the volatility out there. And as a result, I think we can pretty clearly take it off our 3 frequent offenders list. It used to be excuse me, coming down with something towards the end of the year here, listeners. It used to be Bitcoin, nat gas, and lumber were our 3 frequent offenders. These days, well, Bitcoin getting back in there. We'll get to that in a second. Nat gas still definitely deserves its spot in the 3. And then lumber, I don't know. Maybe we'll have to have a poll for what should be our 3rd frequent offender these days, because lumber certainly doesn't fit the bill anymore. And then our number 1 light side mover this week, also our largest percentage mover this week, it's palladium. This one's been an interesting story all year long, listeners. It's been moving almost every week. I do kind of wish there was more options activity out there, because I would have liked to spend a little time at least parsing the activity out there in palladium. But alas, you know the deal. Not a ton to be found, but there is some underlying movement this week, up 9.37%. It was number 1 in the same direction last week, up 14%. So you're closing in on 25% to the upside over the past couple of weeks out there in palladium. So yeah, a good couple of weeks out there for the bulls in palladium. Now you might be asking, it's your final show for the year. Why don't you go a little bit farther back and tell us what the movers and shakers for the year were? You know what, listeners? Just for you, just for that one person who asked, I think we could accommodate that request. So here we go, listeners. For the movers and shakers for the entire mad year, that was 2023. Now I'm faced with a conundrum. Where do I start, listeners? To the dark side or to the light side? We have impressive movers and shakers in both directions. I will say the largest percentage mover this year was to the light side. So perhaps to keep things with a ray of optimism, we shall end there. We shall begin in the land of the dark side. We're going to expand. Let's have a little fun. Let's go to a top 10 and a bottom 10 for the movers and shakers for the year. Why not? Let's have some fun, listen. All right. Number 10 on the dark side, the dark side movers and shakers, the dark side top 10 for 2023 listeners. We have heating oil off 14.22%. So a rough year in heating oil out there on the energy side. Number 9, we jump to ags now, some familiar names. Soybean meal, just talking about them. Number 9 off 14.29%. Number 8, another name we were just talking about. Back to the ags, instead we're staying with the ags and moving on to dairy. It is class 3 milk off 17.46% this year. Number 7, keeping it in the ags, but moving on to Chicago wheat off nearly 20% this year, 19.7% for Chicago wheat. Number 6, keeping it in the ags, but moving to the livestock. A rough year across the spectrum for the ags. We're going to the livestock now. It is lean hogs off 20.28% on the year. Number 5, once again in the ags. Going back to the beans complex, soybean oil in particular, off 23.2%. So a lot of ags in the bottom half of our dark side this year, listeners. Let's go now from number 5, soybean oil, off to the metals. Number 4, our old friend palladium. Like we said, it has been an intriguing year for them. A lot of action out there in palladium. The last couple of weeks, it's been a lot of upside. But net on the year, palladium giving off about 26%, 26.21% to be precise. Number 3, we're staying with the wheat. It is KC wheat off 27.4%. Number 2, still staying in the ags. Definitely a theme to our dark side this year, listeners. A lot of ags. In particular, corn, number 2, off 28.65%. And our number 1 dark side mover for the year, although not quite our number 1 percentage mover for the year. It looks like it would fall somewhere in the top. It would be number 3, I think, for the light side for this year. So pretty close, but not the top banana. But the top banana to the dark side, if you will. It is our old friend Nat Gas, taking a drubbing in 2023. A lot of that Ukrainian premium that snuck in there in 2022, getting sucked out this year. Nat Gas coming in down 52.5% this year. So a rough year for Nat Gas. Again, just listening to the show throughout, certainly for the last couple of months, listeners, if you want to hear a lot of the Nat Gas breakdowns that have been going on out there. In general, yeah, if you were gobbling up upside in Nat Gas, bit of a rough year this year. To the light side we go. Number 10, we're starting in the equities. Surprise, surprise. It's the E-mini S&P Mid-Cap 400, up 13.03% this year. Number 9, industrial sector, up 13.84%. Number 8, feeder cattle, up 21.08%. So we're going from the equities back to the ags, back to the livestock, but a very different story than lean hogs. The feeder cattle getting a boost this year. Number 7, back to the equities. It's the S&P, up 22%, pretty much exactly. So intriguing stuff there. Number 6, it's the Nikkei yen-denominated Nikkei, of course, up 25.16%. Number 5, it is the consumer discretionary sector of the S&P, up 36.77%. So consumers had a lot of discretion this year, and they showed it at our number 5 spot. Number 4, keeping it in equities. I'm seeing a theme to the upside as well, listeners. Equities, the E-mini NASDAQ 100, up 48.64%. No surprise when the quote-unquote Magnificent Seven were almost single-handedly carrying the markets on their back this year, that the NASDAQ would come in at number 4, listeners, up nearly 50% on the year. Number 3, the tech sector in and of itself, just pull that out. It's up over 50%, 50.27% now on the year. Number 2, the communications sector up 51.65%. And Bitcoin, our old friend Bitcoin listeners, up 161% on the year. Yes, it's been quite the rampage for Bitcoin, quite the last month or two on the crypto side, as everyone and their mother seem like just hotly anticipating the launch of the forthcoming, at least potentially, at least for the approval or the ETFs, I should say, coming maybe even in January. So that's certainly what the market is pricing in, hence this explosive upside we've seen in the crypto space. Of course, if you want more crypto analysis, you know where to go on the network, the Crypto Rundown every Monday here. As we keep on rolling, we track a lot of trades here on this show, and we thought it'd be fun to do a little bit of analysis of some of our highlights, or indeed, in this case, the low light of the year.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, let's get into the low light for the year. We looked at a lot of interesting things. You could certainly maybe nominate a few things for this category. Some of those strips we talked about every week in nat gas, certainly where the call strips are going to die every week, those could certainly be nominated in this category. I wish it was this year. It was actually last year for those $1 verticals that were going up for size in WTI. That one stands out as being just ridiculous no matter how you slice it. Just your broker is the winner on those trades and no one else, listeners. But this year's probably most dubious, dumbest, call it what you will, trade of the year is a trend that has continued for some time. And this is something we talk about every week whenever we talk about activity in the equities, particularly in the S&P 500 E-mini. What's the first thing I always say, listeners? We have to filter out the overwhelming amount of noise in these garbage puts. People continue to pick up nickels in front of the steamroller. Now, go figure, that trade has worked out for the better part of the past year because we've seen mostly green on the screens. We haven't seen the turbulent markets that would really threaten these. And these are usually a fairly safe distance out of the money. And we have some examples here of when the S&P was around the 4,000 level earlier this year, people trading nonsense like 2,100 puts in the S&P. So probably not likely over the span of, let's say, a week in this case. But still, also, how much premium are you getting for those? How much capital are you tying up from a margin perspective? There's a lot of reasons why these trades are not my favorite. I used to see a lot of these going up in the SPX pit back in the day. There was a certain element of the pit and of the audience that just loves to sell these things, and that's how they make their money. And certainly, I can understand that viewpoint, but just the fact how much of that still persists to this day, every week, 400, 600, 800 handle out of the money, S&P puts going up like clockwork. It is a little bit disconcerting in the year 2023, now heading into 2024, that we're still seeing so many people picking up not even nickels anymore. The nickel would be charitable, picking up a penny, a few cents in front of the steamroller week after week. That's the trade, listener. We say it all the time. It works until it doesn't. And when it doesn't, you have to have a plan in your back pocket for that rainy day. So hopefully this is not you. This is a difficult trade to make work on the retail account anyway. So hopefully it's not of our listeners out there doing this, but still, it does go up. Persistent volume week in, week out for size. So I thought it was worth mentioning here on the show. Also worth mentioning, we usually at the end of the year do our cross-asset correlation breakdown for the year, see how all these products stacked up, how they actually moved. We hear a lot of debates about, is Bitcoin really digital gold? Is it negatively or non-correlated or positively correlated with equities? All these debates. We try to answer that on the show every year with our cross-asset correlation. We're still compiling the data for that right now, listeners. So we'll probably come back with that segment as a special episode maybe early in the new year. As we keep on rolling right now with some of our memorable futures options feedback for 2023.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody, welcome to the Futures Options Feedback, the portion of the show where you folks have taken the reins pretty much all year. And we've taken your pulse this year, listeners, on a lot of interesting topics, a lot of which dovetailed very nicely with this show and with this audience. We thought we'd hit on some of those now. Again, maybe towards the end of the year, maybe next week, maybe we'll try to put together a compilation of the results of all of our questions of the week. I mean, you folks at the end of the day, I've said it many times, are the ultimate arbiter of all of these questions that we ask at the end of the day. You folks are the determining factor that we look to. So we've polled you on a lot of interesting topics this year. We have a lot of great data. I'm going to share some of it now. If you want maybe the full rundown of your thoughts on a wide variety of things outside of just the universe of TWIFO, so volatility, 0 day, all these things, crypto, then maybe stay tuned for that. Maybe we'll see if we can compile something like that for you folks for next week. But right now, let's get into some of the TWIFO-related, TWIFO-driven questions that we asked you folks this week. We started almost exactly a year ago in the first trading week of last year, first trading week of this year, asking you quite simply, we're kicking off the year with our annual sentiment poll. If you had to buy a 10% out-of-the-money call expiring at the end of the year, so next week, in one of the following products, which one would you choose? We gave you 4 asset classes. You know, your S&Ps, or it could be whatever flavor, E-mini, SPX, SPY. We don't care. That's kind of your broad equity choice. And then, of course, crypto, in particular Bitcoin for the purposes of this question, or WTI, our old friend WTI, or VIX. And if you were around this year, listeners, you know kind of how this one worked out. 10% out of the money call in the SPX. Yeah, that one worked out. Bitcoin, that one definitely worked out. WTI, not so much. VIX, not so much there either. So the actual winners in terms of return would have been Bitcoin, blowing the doors off it, as well as SPX number 2. In terms of our audience, what you folks chose, 43.3% of you chose the S&P 500. Again, not a bad choice, just not the overall winner. Then we actually had a tie for number 2, which is interesting, between WTI and VIX, both coming in around 24%. And then bringing up the rear, the one that turned out to be the real-life actual winner, was Bitcoin. Only 7.8% of you wanted to buy a call in Bitcoin in early January. Now, I get it. That was only about a month and change after FTX. We were kind of in the middle of another mini crypto winter. A lot of you had your faith shaken in the crypto ecosystem for good reason. So I can certainly understand why that one kind of came in the rear. But in hindsight, Bitcoin was clearly the right choice there. Fast forward a few weeks, listeners, to February. We asked you a question along those lines. In crypto particularly, we asked you if you had to buy a 10% out of the money call expiring at the end of the year again, this time in one of these following crypto assets, which one would you pick? Gave you 3 choices and then a fun 4th one. Gave you Bitcoin, obviously, ETH, Solana, or I'm done with crypto. Obviously, for the first 3, you couldn't really go wrong with any of them. They're all up substantially on the year. I'll have to go crunch the numbers to be sure. I would have to say Solana is probably the net winner right now, but I haven't exactly crunched all the numbers to see for sure. Certainly, it's up there. ETH obviously has done well as well. Bitcoin, obviously, we just talked about it, up 161% on the year. So a good run there. You can't go wrong with any of these 3 choices, quite frankly. But I would say probably it's Solana and then Bitcoin and then ETH. But what actually won our poll, listeners, excuse me, was I'm done with crypto. Exactly a third of you, 33.3%, chose to wash your hands of crypto back in February of this year. Almost precisely the wrong time to be doing that, but such is life, listeners. 30%, number 2, chose Bitcoin. So interesting, not a bad choice there, obviously. Number 3 was ETH, 20%, 16.7% only choosing Solana. Again, Solana very closely linked to FTX. Understandable why in early mid-February people would still be a little bit skittish on that one. But that turned out to probably be the right answer. So yet again, the right answer coming in last in our audience polls. Late in February, we asked you a question that's on everyone's mind still right now. In fact, yesterday's little, people are calling it a mini flash crash out there in the S&P 500. Could it have been exacerbated by all the zero DTE fund, which brought us to our question at the end of February, which was quite simply, is the zero DTE explosion in the S&P 500 increasing intraday volatility? You folks out there overwhelmingly agreeing with this one. Nearly 61% of you choosing yes, 39% going no. So nearly 2/3 of our audience saying zero DTE, increasing intraday volatility. There could be an argument for that right now. I think the jury is still out. Do they cause these crazy events we're seeing, like the mini sell-off yesterday? Probably not. Do they act as potentially an accelerant? That could certainly be argued. So that's where I think I fall right now. In terms of February, nearly 2/3 of you said they are increasing intraday volatility, and maybe hard to argue against that, even though I know our buddy Mr. Matt from Orats likes to argue because the market makers, this allows them to hedge a little bit differently, put those in different buckets than their traditional options, that maybe that is damping down intraday volatility. I tend to lean the other way, but again, this is another one where the answer is still fluid and we're still crunching the numbers. So intriguing. Earlier this year, you folks were nearly 2/3 in favor of the fact that they are adding a little bit of fuel to the fire. I'm sure if we ask this one right now, might get a very similar answer. Might even be stronger. Might be over 70% given what just happened yesterday in the markets as we're recording this, listeners. We also asked you in May, jumping ahead to May now, listener, you said, in these troubled times, where are you allocating the majority of your portfolio? Gave you 4 choices: cash, crypto, equities, or the commodities/fixed income side. We kind of had to lump them together. After all, listeners, these are predominantly Twitter polls, and they only give you 4 choices at the end of the day. And cash at the time was the clear winner. 45.6% of you folks choosing to put your money in your mattress back in May, followed by equities coming at number 2, 32.4%. Obviously, in hindsight, that one was the winner, chicken dinner. Commodities/fixed income, that's a little bit more challenging one, obviously, because it's such a broad bucket. Some commodities like crude not doing well. Some assets in the fixed income space doing well, so a bit of a mixed bag there. 19.1% of you, though, choosing that for number 3. Crypto, again, even all the way into May, it seemed like the reticence for crypto was still very strong. Only 2.9% of you choosing crypto. In hindsight, that was the winner, chicken dinner of that poll. So intriguing results yet again. You folks leaning on the dark side sometimes, maybe to your detriment. Let's see. Let's keep on rolling to the middle of May, May 11th. In particular, we did a flash poll during the TWIFO show at the time. This was getting to the Fed Watch, a very interesting tool. We talked about it very recently with the, not the creator of the tool, but the creator of the modern incarnation of it over there on the CME website, our buddy Mr. Nick Howard. You can check that out on the pro side of theoptionsinsider.com/pro. Another great pro Q&A doing fun stuff in AI and everything else. You should be checking that out. But our flash poll at the time, this was kind of interesting to us. We said, at the time, FedWatch was showing a nearly 50% probability of a rate cut as early as July, listeners. We asked you, do you think that will actually happen? It seemed kind of insane to us. We wanted to know if we were alone in that. We gave you 2 choices. Yes, there's going to be a rate cut in July, or no, that's insane. Obviously, with hindsight, we know how that worked out, but at the time, it seemed kind of nuts, and thankfully, you folks agreed with us. 92.9% saying, no way, that's completely insane. Only 7.1% of you saying, yes, there will be a rate cut in July. Unfortunately for you, 7.1%, that did not come to pass. But fortunately for all you folks, Powell seems to have you covered now, promising 3 rate cuts to come next year. Fast forward again to June, listeners. We asked you folks, June 5th, we've seen a lot of green on the screen this year, but also aggressive bursts of selling that can turn things red quickly. Look at yesterday, another example of that. But quite simply, will the S&P 500 close positive on the year? We gave you two answers, very simple, heck yes or heck no. And at the time, 57.9% said yes. That does appear, with about 1 week to go in the trading year, that does appear to be the right answer unless we get some aggressive red on the screen in the next few sessions. 42.1% of you choosing heck no, which is interesting because you know anything about our audience listeners, you folks tend to skew a little bit bearish, a little bit dark side. So the fact that more than half of you went to the light side that time, very interesting. Maybe a sign that the worm was turning out there. Let's fast forward once again to August, listeners. And this time we went back to our question from the beginning of the year. We wanted to kind of revisit your sentiment on this. We asked you quite simply, once again, if you had to buy a 10% out of the money call expiring at the end of the year on one of the following asset categories, which would you choose? S&P 500, Bitcoin, WTI, or volatility? As you will recall, listeners, when we asked this first week of the year, the equities took it with 43.3%, followed by about 24% each for WTI and VIX, and a little bit under 8% for crypto. When we asked you again in August, the percentages were similar, a little bit lower for the equities. Only 37% of you wanted to buy a 10% out of the money call in the S&P 500. 29.6% of you choosing WTI. Again, that one not a winner. Volatility, 25.9%, also not a winner. VIX has pretty much done naught but come off since that period. And then only 7.4% of you, again, this was just recently. This was on August 14th when we kicked off this poll. Only 7.4% of you even then wanted to touch Bitcoin, which in hindsight was the clear winner of this poll as well. But from our audience's perspective, not so much, only 7.4% choosing that one. Keeping with August, we asked you folks, again, another repeat question, again, to try to gauge your sentiment, see if it had evolved over the course of the year. We asked you folks quite simply, cash was king back in May. When we asked you this, now let's see if your outlook had changed. And we asked the same question, where are you allocating the majority of your portfolio right now? Cash, fixed income. We did break it up a little bit. I take it back. We said cash, fixed income. A lot of you asked the first time, why is fixed income combined with commodities? So we separated them. Cash, fixed income, equities, or this time commodities/crypto. Put them together in their own bucket. And we had a tie, almost 36% each between cash and equity. So equities coming up a little bit, cash coming down a little bit, but still pretty much taking the top spot. 19% this time going for fixed income, and then bringing up the rear once again, what turned out to be the winner chicken dinner in real life, at least on the crypto side. It was commodities and crypto, only 9.5% of you going that route. So fascinating. Our audience having some interesting viewpoints, not always on the right tip of these, but again, you folks, the ultimate arbiter of all things, at least here on the network. We do it for you. Let's keep on rolling. Let's go out to September 11th, an inauspicious day. And we asked you that week, again, zero DTE. We asked you quite simply, zero DTE. We all know you S&P 500 traders love it, cannot get enough of it. But looking down the road a little bit, what is next? Which product or market or complex should list zero DTE options next? We gave you four choices. Your single name stocks, so your Apples and your Teslas, everybody likes to trade out there these days, or getting out into the commodity side a little bit. Let's talk maybe some energy or some ags. You want to see zero-day soybeans? I don't know. We put it out to you folks. Or the crypto side. I mean, there already is some zero-day liquidity, depending on where you look. But folks, do you want more of it? Or maybe should we go the vol route, go out to VIX and, VXX, all the universe of ETPs around VIX. Again, we saw a one-day VIX launch this year to a lot of fanfare and then not much interest. So do you want a zero-day in VIX? Well, the answer, listeners, maybe not too surprising. 43.2% of you choosing the single-name stock route. You want your zero-day Apple and your Tesla. Obviously, you can approximate that when the weeklies expire on Friday, but you want it every day of the week. And then number 2 was vol. You want some 0-day vol. You want 0-day VIX. Nearly 30% of you, 29.7%. A lot of people in the business don't think that's going to come to pass anytime soon, but you folks clearly want it. And then number 3, we have the commodities, so energy, ags, take your pick, 18.9%. I do think this is going to be the winner chicken. I'd probably, if I had to wager, I would say WTI coming sooner rather than later on the CME front in terms of products beyond the equities that are going to get the 0-day treatment. And then bringing up the rear, once again, crypto. Now, again, some of this liquidity does exist, but still intriguing. Our audience, even as late as September 11th, still pretty reticent on the crypto front. That's right before we started to see the upturn there, heading into later Q4. And then our final question of the week, at least that dovetails in with TWIFO. We asked you folks back in late November, coming into the Fed again, a lot of people debating the 2% inflation target that the Fed has used seemingly since time immemorial in terms of how they like to gear their inflation. Obviously, they made some changes back in August of 2020, which maybe in hindsight they could probably take back if they could. But we asked you, is it time for the Fed to revisit that? Is it too high? Is it too low? Or is it just right? Is it the Goldilocks inflation target? And it turns out 53.3% of you said Goldilocks. It's just right. You like your inflation at 2%, no more, no less. 26.7% number 2 saying, yes, they should change it, but I think it's too high. It should be lower than 2%. So we got some inflation hawks in the audience. And then bringing up the rear with 20%, yes, you'd like to see them change it, but it's too low. Maybe they're pumping the brakes on the economy a little bit too much. You want to see it raised maybe 2.5%, maybe 3%. I don't know. What number makes sense for you? All right, listeners, that's going to do it for this end of the year look back here on TWIFO. Remember, stay tuned if you want more data, more insights into what our audience was up to throughout the year, your views on a variety of different issues, not just the ones touching on TWIFO. Stay tuned. Maybe we'll see if we can get an entire year in review episode for you up on the network sometime next week. As well as, of course, there will be more content throughout the rest of this week, coming back again tomorrow. Noon Central from the Southern Studio for Volatility Views. Going to do an end-of-the-year retrospective there as well. And then after that, one final time on the pro side for Options Oddities. We will be off next week for the final trading week, I should say. We will be off for the final trading week of the year. Obviously not a monster. Not going to make people do shows on Christmas. And then the week after that is New Year's, so no Monday shows either. But we'll be back in a couple of weeks. And indeed, we'll be back in the new year with another episode of This Week in Futures Options. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn.